Hey, good afternoon and blessings, everybody. It's your man, Rod Hickman, Generational Wealth Builders, where poverty ends with us. Look, super excited to be coming to you on this hot Sunday afternoon. Listen, super excited to be here with you. We have had a wonderful weekend here in the Generational Wealth Builders land. This is a historic month for us. We're doing some amazing things here. We have agents that are opening up offices now. They're becoming agency owners. They're getting ready to take their family to the next level and all of that. And as y'all often hear me say, when you don't see me on here, because again, this is the part that I really love. I really love getting on here, dropping information, sharing information with everybody about ways that you're actually able to save, grow, and make money. All right. So listen, today, here's what I want to talk about. As you can see there in the title, today we're going to talk about the right and the wrong way to buy life insurance or to shop for life insurance. And I'm gonna tell you what generated this. And normally I'm just gonna be quite transparent. When I start seeing the same thing happening multiple times over, that lets me know that we have a problem, right? What am I seeing multiple times over and over? One, I'm saying most people don't have a life insurance policy outside of their job, right? And that's because a lot of the time people have mistrust for insurance agents, right? And why is that? And again, let's just be honest. In some cases, it's deserved, right? Because some people have what I like to call commission breath. What do I mean by commission breath? They're just going to sell you something so they can make $1, right? And commission breath, you can smell them kind of folk, as soon as they come along, because, as soon as you start talking to me, yeah, I can do this, just sign right here, right? They don't even let you breathe a little bit. I call that the used car salesman tactic, and nobody likes that, right? That's why people, when you go to the car lot, even though you're looking for a car, you don't want the salesman to help you because you're like, bro, I don't need that pressure. Sis, back up, give me 50 feet, right? So with that being said, same thing happens in life insurance, right? Not with the generational wealth builders, right? What we train our agents to do is to educate you on what's best for you and for your family, right? Because an educated person makes informed decisions, right? An educated person makes informed decisions. And we want to make sure that we empower you so that you see us as an ally and not somebody that's trying to get in your pockets, right? Now, so the one thing we're seeing is more people are dying without life insurance. And literally what that does, that now brings on a whole new level of hurt. That brings on a whole new level of grief, right? Again, now folk have to try to figure it out. How are we going to bury Rayford? How are we going to do this, that, and the other for Nikki? You know what I'm saying? Now you start trying to figure out what's going to happen to the children. All these things you're trying to figure out because you did not have a life insurance outside the job. Now, here we go again. Let me put this point in there too. A lot of times people are so secure with their policy in the job because they don't think about the fact that when you leave that job, that life insurance policy is not going to be there. And a lot of times when people are having those thoughts, like they're just not even thinking that, hey, they're thinking like, yeah, I'll just retire and I'll have enough money. But they're not even thinking about that. Okay. What if you don't make it to retirement? Again, I can tell you there's a client that I spoke with who and it was a sad case. The individual wanted to be able to give some insurance to his daughter, wanted to be able to leave something behind. But again, the way he's set up, we can't get him anything now. And again, what happened, he had a job, but what happened, because of his illness, the job fired him or they let him go. And when they let him go, there went his life insurance policy. So again, a lot of times we, in our head, we're not thinking through things because if it doesn't personally happen to us, if it doesn't personally impact us, we typically don't really pay attention to it. But that's what we're here for. We're here to help you plan for the worst day. Not that you're thinking, not that you're even wishing for it to come, but more importantly, we want to make sure that you're planned for it. And as you're planned for it, now if it happens, again, you now have an ally in us who will swing in to save the day, to make sure that as your family is grieving, we're at least coming in with some good news. That's what we do. All right. So with that being said, that's point number one. People don't have a policy outside the job. Point number two that I want to talk about is that people feel like, okay, well, I'm gonna get a bundle deal on my life insurance. They literally say that I'm gonna get a bundle deal on my life insurance because I got it through with my homeowners and my auto insurance. So I'll just get it through that so that I can get some insurance. But that's what I want to teach you on today. I want to teach you how to properly shop for life insurance because there's a right way and there's a wrong way. Let me just start off by saying just taking somebody's word for it is the wrong way, even me. Right? Don't just take my word for it. Again, when I sit down with a client, I don't run through it. I schedule an hour and a half, 2 hours with a client because I want them to be able to ask me questions. And then I'm very transparent, like, hey, no, I need you to see this here. Look at these numbers here, because here's what I want you to understand. And y'all can coin this. I'm probably going to get this on a shirt. But it says, people lie, numbers don't. Numbers don't lie. Number 1 + 1 is still 2. I don't care how you squeeze it. 1 + 1 is still 2. Now, here we go. The right way to actually shop for life insurance is, first of all, to know how much life insurance you need, right? That is the very first thing that you need to know. How much life insurance do I need, right? The very first thing when you're shopping for life insurance is how much life insurance do you need? It's critical for you to know this so that you don't get played. Because what will happen is you'll just say, well, hey, give me $100 worth of life insurance. And that could either be too much or too little life insurance. So you must know how much life insurance you need. And so I hear you now, well, Rod, well, how do I even figure out? I don't even know how to calculate that. Well, guess what? That's what old Rod is finna help you out. So let me share my screen. So as you can see from my screen here, there's a model that we use in the insurance industry, and it's called the dime model. And what the dime model does, it allows you and your agent to sit down and understand exactly how much life insurance you absolutely need, right? Now, this is a ballpark, but again, this allows you to be able to have a customized life insurance plan. So DIME is an acronym for debt, income replacement, mortgage payoff, education, and I put / retirement. I'll talk about that in a second. So let's talk about debt. The first reason why debt is important is that most people don't know that if something should happen and you pass, there are creditors that can actually lay claim to your insurance. Absolutely. They can tie it up in probate. You mad at the insurance company. It's not even the insurance company. It's just that some creditor has waited for that person to pass. And now what they're doing is they're going to tie that up in probate court. So the first question that we ask our client, okay, Mr. and Mrs. Client, okay, a ballpark, how much debt do you have? And you see it says debt less the mortgage, meaning we're not counting your mortgage, right? So we ask each client, okay, how much debt do you need? Well, how much debt do you have? We're talking about cars. We're talking about anything that you want to keep, right? So you must understand that. If you got a truck, if you have you're still paying the note on. If you got a boat, whatever the case may be, if you got credit cards, student loans, things like that, you need to make sure that you account for it and make sure that you have enough coverage to cover that. So let's just say in this example, this person said, well, I got $50,000. Now, most agents will stop right here because they'll be like, yeah, we just want to make sure your debt's covered. No, we got to also talk about the spouse. And let me say something to you, fellas. And again, I mean this from a really, really sincere place. Stop devaluing what your wife brings to the table. If your wife is the homemaker, and you may be, or let me say it another way, because again, we want to make sure we're being equal here. Whoever is the breadwinner, just because you make more money, it doesn't mean that you get a reduced policy on the one who doesn't bring in the same amount of money as you. You must make sure that your family is taken care of. And if I can be honest, if the husband is making more money than the wife, and the wife is the one staying home taking care of the children, realistically, you probably need to put more insurance on the wife or whoever is staying home and taking care of the children. Why? Because God forbid if something happens, who gonna take little Johnny to track and field? Excuse me. Who gonna take little Susie to whatever the case may be, to dance or whatever the case may be, right? So you need to make sure that you're thinking about that. And these are the kind of things that when we sit down with our clients, we make sure that this is something that's talked about, right? So the spouse may say, well, I don't have any debt. Well, let's just put $50,000 anyway, right? All right. So then we talk about income replacement. Now, this one here is probably one of the most interesting times when I sit down with the family, because most times when we're trying to figure this out, fellas, we get a little timid right about here. What do I mean by that? So what the income replacement does, we basically take your annual salary and we multiply it by a series of years. And that's what we're going to leave behind for your family. So let's just say an individual makes, let's just say they make, I don't know, let's say they make $50,000 a year. And then I'm going to say, well, how many years of your income do you want to leave behind? Brothers, for the life of everything that's in me, please don't say 2-3 years. Come on, fam. Don't do me like that. Don't put me in that situation, bro, because she's going to look upside your head and be like, you said what? Listen, say 10 years. Even if you don't mean it, bro, say at least 10 years. Because what this is going to do, this means that even if something happens, what this is going to do, this is going to put your annual income back into the home for that many years, right? So say 10, say 15 years. That's a good way to come out smelling like a rose. I promise now. I'm telling y'all, I can't tell you how many dudes that almost got swung on and everything else right here in my presence. I'm just not no snitch. So I ain't going to tell you who did it, right? But either way, just understand that, right? So let's just say in this example, he said 10 years, then of course we'll do $500,000. Now, if the spouse doesn't work or the other spouse does not work, then we just mirror that. But let's just say the wife makes $60,000 a year, then again, we're going to do the same amount of years. Does that make sense? So again, if he do 10, we'll do 10 on the other spouse. All right. Mortgage payoff. Now, if you own your home, we want to make sure that your forever home gets established, right? So whatever your mortgage is, and I'm not talking about your monthly payment, but what we're talking about, whatever is needed to pay off your home, that is what we're talking about here. So let's just say you have $300,000 on your home right now. That's what we'll put right there. All right, $300,000. Now, you may say, but Rod, we don't own a home. We rent right now. Then my question is then, okay, how much home would you like to be able to leave for your family to go and establish their forever home, right? And again, most people say $250,000, $300,000, whatever amount you set aside and say, you know, again, it's the Dr. King. I may not make it to the promised land with you, right? But y'all go on and be blessed. And so that's where you're setting money to the side to make sure that your family is not being put out or anything else like that, that they're not having to take from the income replacement to be able to now put a roof over their head. Does that make sense? So that's what we're looking for right there. That's what the mortgage payoff solves for. It solves for the fact that, again, you're able to make sure that your family has their forever home. All right. Now, last but not least, education. And I have / retirement. Why do I have that there? Again, if you have young children, you want to make sure that their education is paid for, right? You really want to make sure that education is paid for. You may say, well, we don't have children or our children are already out of the house. Well, what this money can be for is to supplement their retirement, right? It's to supplement your loved one's retirement. Again, they already have the income replacement, but this money can be specifically for their retirement, right? And so you always want to make sure that your loved one is taken care of. So if we do say they have children, again, they get a 4-year degree, anywhere between $100,000 to $150,000 for a 4-year degree. So again, we just basically say $150,000 per child. So if you have 2 children, again, that'll be $300,000, right? Folks, now that is how we figure out how much insurance that this person needs. And so in this example, we see this person, he needs $1.1 and the wife or the spouse will need $1.25 million. Does that make sense? Folks, that's an easy peasy way to figure out how much insurance you need. Now, let me explain something to you. When you are calculating, and here's the second point that you need to understand. You need to understand what the insurance is for. Past the dime mile, what the insurance is for. Let me tell you why I say that. Over here, you see I have temporary, permanent, temporary, temporary. Why is that? Debt is temporary, right? Debt is temporary. So what that means is for this, we're going to look for a term policy, right? Income replacement. You will be contributing to your loved one for the course of your life, right? So that is something that we'll look for more of a permanent policy for. Again, your mortgage payoff, you can pay your mortgage off before you pass. So that would be something that we would look to put under a term policy. And then the last one is the education/retirement. We'll call that term as well. So if we looked at that in this example, the first insured would need to have at least $650,000. So we'll just break it down here. So term, $650,000, and permanent, they would need about $500,000. Well, $500K. Too easy. See, this is the level of service that you get when you sit down with the generational wealth builder, right? This is the level of education that we provide our clients so that when they leave, they are empowered to know what it is they have. All right. All right. Last thing, and I'm out of here. Now, with that being said, knowing now that you need $1.25 million worth of insurance and knowing that this person needs $1.25 and 1.15, now we ask, okay, how much do you set aside a month? How much, seeing that you got $1 million worth of life insurance, how much now can you set aside for a month to meet your insurance needs? And once you give us that information, that is when we're now able to go forth and find you the overall best policy for you and for your family. And folks, there you have it. That's what we do. That is the right way to purchase life insurance. If somebody just asks you for your money, and again, now don't get me wrong, you have to qualify. You got to know your age, you got to know your ailments and all that there. We need to know that because all that goes into the cost as well. But if they're not breaking it down like that to you to make sure that you understand why you need that amount of life insurance, if they're just saying, well, okay, well, what's your budget? Okay, I can get you $25,000 worth of life insurance. Well, guess what? $25,000 worth of life insurance ain't going to do much. It's not. And it's literally, if I could be honest, it's a slap in the face, right? It's a slap in the face. Again, some people budget, that's all you can afford, but not everybody. Some people, because they're like, well, I got it bundled and I got it from Jake or whatever the case may be. They like, oh, I got a good policy. No, you don't. You don't. And I'm just being honest with you. Again, like me, love me, hate me, don't matter. I'm always tell you the truth. Because again, I want to empower people. I don't want to see any family having to struggle because of the loss of a loved one. That is the most heartbreaking thing to me. When families have to struggle because nobody ever told them. And then guess what? People will come in here and then they'll be like, man, we didn't have this, that, and the third. And they break down in tears. And I'm a big crybaby, man. So I break down with them because I'm like, man, if only we could have reached out to them. If only we could have reached them and get them to understand the power of life insurance. No, you're not looking to come up on the death of someone. That's not what it is. You want your legacy to remain. You want your legacy to be strong. And I know every man out there wants to make sure that his last name goes strong. Every man out there wants to make sure that, you know, his wife and his children and the rest of his generation are taken care of. And women as well. They want to make sure that everything is taken care of. And they certainly want to make sure that Shirley ain't over there too fast. Like, y'all know what I'm talking about now. And women like, don't let somebody be in there consoling Frank too hard. And how about I bake this apple pie? She gonna raise up on that thing out that casket like, all right, what we got going on here, right? But again, make sure that your family's protected. There's a right way and a wrong way to shop for insurance. And I hope that I hope that you'll share this information. And let me say this, don't be afraid to talk about life insurance. Life insurance is not the boogeyman. It's not. What the boogeyman is poverty. Poverty is the real boogeyman. And when your family is not properly protected, guess who's going to haunt your family? Because now they have to figure out how they're going to bury you. Now they have to figure out all this stuff, right? Now, again, can they keep your truck? If they can't keep your vehicle, now that's getting repossessed. You get what I'm saying? That's what happens when you don't have life insurance. One last thing, and I'm out of here. Remember, you want to make sure that you have life insurance that works for you while you are alive, right? While you are alive. Rob, what are you talking about? You want to make sure that your life insurance policies has the accelerated death benefit rider, which is also known as the living benefits. And what that means is, God forbid, if you're diagnosed with a critical, chronic, or terminal illness or injury, you can get up to 80% of your death benefit while you're still alive. We have a carrier that also, in case someone is diagnosed with Alzheimer's, they'll give you access to that money now. You know, I hear so many stories. I was having a conversation with a young lady last night, and that's kind of what prompted me to get on here tonight. And, you know, she was telling me that she's going to have to basically stop working her job to go do home health care, making less money than her job in order to take care of family because family got sick. And again, and I told her straight up, darling, what you're doing, absolutely, absolutely phenomenal. Again, I applaud you for what you're doing. That's noble. But really, you shouldn't be in that boat. Because if we take care of business on the front end and you have the proper life insurance policy, when something like that does happen, you don't have to quit your job. The living benefits will kick in. You'll get up to 80% of it. And now the family member or whoever can now be in a proper facility getting the proper help that they need. That's what we do. Listen. Oh, Jesus. Too many times we take upon us the hard thing because we feel like it adds character or builds value. It does not. There are some things that we just should not do. We should not be in a position where we have to watch a loved one, an esteemed loved one, wilt away. I don't care what you say. I don't care how you try to justify it. Well, my mama be there. I hear you, but you should not have to see that person who you held in such great esteem. You should not happen to be the one sitting there watching them go down. You shouldn't. You just shouldn't. Again, there's no honor in that. You should be in a position where you can go and visit them. You should not be surrounded by that all day, every day. Or even if you want to have them in the home, you should be able to pay someone else to do that. And think about it like this here. If somebody have a $500,000 policy or $1 million policy, and you can get up to $800,000 because of what they're going through, you don't think you'll be able to pay for somebody to come in the home and do what they need to do? All day, every day. This is the power of having the right life insurance policy. And this is why we're growing. This is why we're growing. This is why we have 2 agencies, one in Covington, one in Memphis. This is why we have a affiliate broker. Bro, Ozell Frazier just opened up his office out there in Union City, Tennessee. This is why we have another agency that just opened down in Decatur, Alabama, with Lady Andrea Orr and Anthony Dowdell, Generational Wealth Builders, Bama. This is why within the next 6 months, Team Hughes, Richard and Lamisha Hughes, are getting ready to open an office down there in Port St. Lucie, Florida. This is why. This is why. Because our products make sure that we enrich our people. And when I say enrich, I'm not talking about from the money standpoint, but it gives you that ability to be able to know that if something should happen, if life should throw you a curveball, all you got to do is call Rod. All you got to do is call the Generational Wealth Builder. And we're coming. We're coming. And when we come, we ain't coming with just hung down heads. Well, I'm so sorry about what happened and this, that, and the other. No, we're coming because we're bringing great news. For example, I have a colleague, and let me not rule it real quick, because I thank God that none of my clients have had to make this call. I thank God for that. I have a colleague who insured a client, got her $800,000 policy, $800,000. 7 months later, she was diagnosed with thyroid cancer. However, as soon as she called him and said, hey, man, this is what happened, within 30 days, the carrier sent him a check to give to her for $256,000. $256,000. Now, that might not seem like nothing to you. That might, well, who want to go through that? Again, it's not so much about who wants to go through it. It's about what happens when you do go through it. Now, I don't know if that 256 is going to be enough or not. I don't. But again, think about it like this here. If she can't go to work, doesn't that make sure everything she got going on is still where it needs to be? Exactly right. Here's the kicker part about it. Because it was a term policy that she had, the lady only paid about $575 into the policy. That's the type of, what's the word I want to look for? Assurance that the Generational Wealth Builders, that's what we bring. That's what Lady Eleanor Glover, Lady Tina Washington there in Memphis, that's what they bring. One of our new agents, Regina Benson, coming on, Beverly Dean, Kamisha Dawson. Again, we have agents all over, and we're actually looking to open an office in Ripley. So Lauderdale, we on the way, baby. We got a young gunner that's coming up, and we're super excited about that. But either way, that's my time. I wanted to get on and share that with you because, like I say, I'm seeing more and more of these brand name agencies open up. But the sad part about it is the insurance that they're giving y'all is not what it is. It's inferior. And you're paying more money for inferior insurance. I don't know how to say it. You're paying more money for inferior insurance. Last but not least, I know I said that before, but I'm going to say it this last time, for real, for real. I want y'all to understand something. Whole life insurance is trash. And I did the other video. Go find the other video that I did talking about that. The insurance company should not keep your cash value. And I heard a agent with one of those national companies tell a client, that's our money. You got to realize you got to pay for the insurance. Well, what are my monthly premiums doing? If I'm paying for it to generate cash value, how in the world, if I take the cash value out, you take it out of my death benefit? That's a hustle. That's a racket. So either way, that's what it is. Look, I'm Rod Hickman, Generational Wealth Builders, where poverty ends with us. Listen, knowledge is not power until it's applied. Remember, you can start up an 18-wheeler truck, be full of gas and everything else, and you can rev it all day long, but it's not going to go anywhere until you put it in drive. Listen, y'all have a great day. May the Lord bless you. May he ever smile on you. And we'll talk to y'all soon. Take care. Bye-bye now.